Good morning, everyone. Like to welcome you to the webinar this morning by Fortuna Advisory Group in collaboration with Build Exec. And the topic for today is cash flow management, key financial control, and funding strategies, and how can we adopt the technology to best manage that in our building and construction business. We've still got some more attendees logging in, but I'll kickstart the webinar, and as the more people will join, they'll be with us as they log in. So just a little bit about myself and my co-presenter Julian Krishnan Nair from Build Exec. So I'm the managing director of Fortuna Advisory Group, and with more than 20 years of experience in accounting, finance, and business management in the top corporate positions in Australia and overseas, and very well known in the professional space, rendering advice to various clients in Australia and overseas on tax matters and business services. I manage major international clients, but also help a lot of new clients setting up businesses in Australia. And I've also been awarded amongst the top 3 SME tax advisors in the year 2015, and also the winner of prestigious 40 Under 40 Young Business Leaders Award. A little bit about our co-presenter Julian. He's a partner success manager and works with Build Exec's advisory and industry partners to help builders and trade streamline their business with fit-for-purpose technology. His previous experience with MYOB combined with the years at Build Exec provides him with a deep understanding of the complexities of running small businesses and how to use technology to accelerate the business growth and to achieve the desired work-life balance.
Thanks, Dinesh.
A little bit about Fortuna. We are a multi-service accounting practice with specializing in tax and business advisory, financial planning, mortgage broking, and legal services. And our unique selling proposition is that we take the clients on a journey to fulfill their goals in their business and personal financial life. Fortuna is a multi-award-winning practice, and most recently being the Telstra Medium Making Wave category finalist, and also the winner of the Multi-Service Accounting Practice and the Boutique Firm of the Year award in 2019 and 2020 at the National Accounting Awards. What we're going to cover today, some high-level key takeaway points for today's webinar. We're going to discuss about some of the cash flow management issues which are particular to the building and construction industry. How do we ensure that the project costs in the industry or in your business doesn't overrun on your budget, and some of the key financial indicators that the project managers in your business or in your building and construction and trade related projects they need to keep an eye on. How do you keep control over your project cost? Do you stay within the budget? And then we're going to discuss how Build Exec can help to you deliver the cost controls and projections effectively for the optimum job optimization and project management. So I'll start with some key facts about the cash flow issues in the building and construction industry. It's considered to be one of the worst in this particular industry amongst, if compared to various other industries, as per some of the reports. And as per one of the PwC's report, the construction payment can take up to 83 days on an average. So that means the debtor days or an average cycle of payment in this industry is quite high, with 83 days potentially to be one of the longest in some of the industries in the world. Slow, late, and partial payments can cause serious cash flow issues, and which is one of the issues in the industry. And it's very important that we address the practices that drain the cash flow and adopt some good cash flow practices to prevent the long-term problems in our business. Again, some key statistics from some of the surveys and the reports done in the industry. So on the right-hand side, the graph shows how do the cash flows affect your business. So these are some of the major ingredients which lead to cash flow issues. So payroll growth in having suddenly a spike in getting a lot of orders, as we can see happening at the moment in the building industry, suddenly gone really crazy busy with some of the stimulus grants announced by the federal and the state governments. How do you handle that? A sudden spike in the growth of the business, which could lead to potential cash flow issues. Taking on new projects, capital investment required in the business, pricing, or pricing decisions on your quoting process, and then the raise in the costs. Benefits, ongoing benefits for the employees, and the recruitment to match the demand in your business. And some statistics on the left-hand side show that how do you normally, the business owners address these cash flow issues, typically 51% cases through their own business savings and credit or finance, 34% from their personal savings and credit, and 15% from other various kind of sources. Now, what typically is a cash flow management? So in very layman terms, I mean, there's no sort of jargon. In very layman terms, so if you sort of look at your cash flow reports for your construction business, the whole prediction about your cash flow in the future and making decisions based on that information is the cash flow management. So example, if you expect to receive a $100,000 payment from customer or from as part of the progress payments from various projects in the next few days and few weeks, then how are you going to use that funds to pay your bills today and in the next few days is part of that cash flow management process. So if you know and forecast correctly, then you would be able to make the informed decisions about the utilization of those funds in an effective way, so that you don't follow, or you don't sort of fall in temporary cash flow crunches. Now, some major problems in the construction and the building industry that sort of drain your cash flow in the business. High payroll burden. Generally, the industry is labor intensive, and you can't really, tell your employees that you'll have to delay their paychecks until your customers are going to pay your bills. So, that's one of the costs you have to pay on time on your regular payroll cycle. So, using a lot of subcontractors, which is sort of peculiar to this industry, helps, because I suppose you can manage the payments to the contractors or the subcontractors by putting them in a cycle as you receive your payments from your customers. You can have that agreement or understanding with your subcontractors, which doesn't apply when you have permanent staff. You have to pay on a payroll cycle. Paying your bills earlier than the due date, can also cause temporary cash flow issues, and you really don't have to unless you really getting some incentives for paying the bills early, like some discounts. So if you try to sort of balance the pay cycle, it will still keep your cash flow under control. So by having to pay the bills promptly, or you continue to spend before you receive payments, again, could lead to a problem. Failing to budget for retention. Now, that is typical in the building and the construction industry, that you have some sort of a retention until the project is complete for the job specification. And typically the retention could be 5 to 10% of the contract value. Now, if you don't budget that retention, in your cash flow cycle, that could be a really serious issue, because building and construction industry being a very low profit margin industry, somewhere between 5 to 10% or under 10% profit margins, such a high retention factor could really create some severe issues in your cash flow, and it's very important to plan that ahead in your cash flow planning. Paying cash for your assets. It's very important to manage your working capital. So if you're looking at making some investment in the CapEx, or you need to invest in your plant and equipment, or some capital items which could involve a large cash flow, it's important that you consider the financing arrangements for those large ticket items, and don't disturb your regular working capital unless you have a good reserves out of your cash flow to invest on the capital items. If you use a large chunk of your working capital towards the capital items, then it again would create serious problems in your cash flow. Some of the slow paying customers, again, you need to make sure that you set the expectations right with your customers on the payment terms, and what steps are you going to take if you don't get those progress payments in time. It's very important to set those milestones. And a building industry, I suppose, if there's a financing involved by the customer from the bank, probably it can be a little bit easier, because you can raise those progress payments and the banks will release them on the regular milestones. But depending on if it's a retail customer, and if they are going to pay themselves, or if there's other large construction projects where you're dealing with other big companies, then you need to make sure that you set the payment terms right and set the expectations. Slow in invoicing your customers, so no one is going to pay you unless you issue the invoices to them in time. So make sure that you have a system for the invoices to be issued on regular pattern, and set the expectations for that customers to receive the invoices and then be able to pay in time. Using cash for other investments, it could be sometimes you might have extra cash, if you receive any advance payments, but you haven't sort of spent that money, or the payment of your bills over the term of the project is going to be a little bit later, and you try to park them in short-term investments like term deposits to earn some interest while the cash is sitting idle. Need to be mindful of the dates on when or the time frames when you would need that cash back to flow in the business. So if the funds get locked in and you're not able to withdraw them quickly enough, then it can create problems, and you might have some sort of interest or penalty clauses which might outweigh the actual benefit which you might receive in the form of any income or interest you earn on the short-term investment of those funds. So what are the solutions to effectively manage these problems related to the cash flow in your industry? First of all, very important to establish a good accounting and financial practices. It's well said that you can't manage what you can't measure. So it's very important, to put those financial reporting framework in your business, so that you have access to those reports, which helps you to measure and then manage your cash flow very effectively. It's also important that you understand that it's much more than knowing that how much money you have in the bank, because it's all about managing the entire working capital cycle. You need to make sure have a regular look at your accounts payable report, your accounts receivable report, and do a cash flow forecast that will predict your future cash issues, and you can take any action before it impacts your bottom line. I mean, these reports don't need to be, complicated where you need a CFO to understand them, but, just at its core, tracking cash is simply about, all that good record keeping, and most construction management and accounting softwares can quickly produce these reports automatically, and we'll see that later in the presentation from Julian, how Build Exec and your other accounting software like Xero, whatever, can really help you to have access to those handy reports in your entire management process. Financing the fixed asset purchases where possible, as I just mentioned, that try to finance your capital expenditure or your capex without affecting your working capital. So make sure that either you've got reserves to invest, or you source through loans or bank funding or your own equity to fund the capital purchases and not having a drain on your working capital, which could affect your projects. Negotiating the better payment terms. You need to talk to your suppliers how best you can get the payment terms from them. Like materials or your subcontractors, and buying in large quantities sometimes can help in getting some discounts and getting the better payment terms. So ideally, your payment terms with the supplier should be equal or if not longer than the terms you give to your customers. Asking your main contractor, if you're working as a contractor yourself in the construction, as contracting to larger projects where there is a main contractor involved, then asking them for some upfront deposits or some upfront payments. I mean, then you're sort of on the other side of the table where you acting as a contractor. So, just to make sure that the main contractor doesn't delay payments to you, you need to set your expectations right as you're dealing with other subcontractors under you to get some deposits or to get some material, be supplied to you directly without you having to block your working capital or invest in the actual material. Again, invoicing promptly and regularly so that you can get the payments in time, and then offer some payment options or discounts for early payments to your customers. Now, again, you have to be careful that what sort of margin you have and how much discount you can offer for the early payment. Avoiding over and under billing, and that's where sort of progress billing is concerned. Make sure that when you doing the progress billing, that you keep it as close to your costs per margin. You're covering it regularly. Sometimes an ad hoc billing under the progress payment sort of terms can really disturb the cash flow cycle, because if you are doing an ad hoc billing and you're not covering your entire cost, or if you're getting an excess upfront and those funds are blocked and used somewhere, and you then are not able to utilize them along the timeline of your project, can again create some issues. Process your change orders as quickly as possible. Some additional costs and other change orders, you need to get them approved because because that can change your budget and the project costing. So you need to make sure that that you get that covered as soon as possible when that's initiated by the customer. Try to work on your estimates accurately, and that's where we'll see the importance of using the technology and the right software so that gives you the accurate estimates as quickly as possible, so that you're not wasting a lot of time, but at the same time getting a more precise numbers. Speeding up your closeout process. Again, there's retentions involved. So sometimes if you wait months and you don't complete the last steps in the process, your retention payment could be delayed, and that means your profit on the job is blocked, and you might not be able to start the next project if depending on how much the funds are blocked in the retention. And if you're doing multiple jobs and projects, you could have significant capital blocked in those retentions. Protecting your company's right legally, then again, you need to make sure that your contractual terms are tied with in terms of covering your payments from your customers, and at the same time the retention payments. You might consider some caveats in the contract that allows you to put a caveat if the customer is not, paying, or if one-off projects and you don't have a regular dealing with those bigger customers, but you're dealing with one-off building projects with retail residential. You might not get the payment in time, especially if the banks are not involved, and the customer is paying cash for the entire build. Then you have to sort of rely on the customer rather than submitting the progress payment bills to the banks, where you have more chances of getting paid in time. Okay, so I'll talk a little bit about the cost overruns. Now, just just to define the cost overrun, and I suppose most of you in the building and construction industry would understand that term very well. So the cost overrun refers to an increase in your project cost due to an underestimation during the budgeting process, or some typical factors leading to the change in the cost over and above your budget. So the different type of cost overruns can be classified into four main categories. The estimates, so that means estimates are too low due to factors such as poor understanding of the complexities of the job, or some sort of an optimism involved. And so that again will, Julian will explain, if you're not doing that correctly and not using the software or technology properly, how you can fall short on there. Some of the risks, so this can encompass the potential factors that can cause losses, such as poor weather affecting completion or the underperformance of some of the vendors. The scope creep, this occurs when the deliverables of the job extend beyond what is captured within the budget or the schedule. So the elements of the scope change during the project, and the cost escalation, which is the increase over time in price of a particular line item within your project items. So a very interesting fact by the Gretton Institute that 65% of the Australian infrastructure projects incur a cost overrun, and then the average cost overrun is between 9 and 20% after the principal contracts have been awarded. And that's quite significant, because you don't even have that kind of a profit margin in some of those projects. And if you don't have appropriate clauses in your contract that how the cost overruns can be covered because of sort of not of your own fault, you might end up in losing heavily on those projects, which is not going to be a very good outcome for the business. Some key reasons for the cost overruns. This is again based on some statistics available. 60% cases, material price escalation, poorly defined scope, contractual disputes, time delays, design creep, not achieving productivities, lack of approval, weather, commissioning process, industrial relations. So these are the top 10 sort of items we see, ranging from 2% to 60% of the variation or the effect it can have on your project cost, resulting in a cost overrun. And now, so ideally, if you look at some of the issues I've discussed about the cash flow, about the cost overruns, it all comes back to how effectively you manage the budget. And there are certain important aspects when you're actually developing a budget. And I've highlighted some 10 key factors in developing a budget effectively for your building or construction business or your trade business. First of all, you need to develop a total project budget as early as possible at the beginning, even at the time when you're quoting or when the project is awarded. Analyze the project requirements and drawings to confirm the scope. Closely review any contractor estimates, which will form part of your total project cost, including all type of contract work, subcontractors, material related, and any other work you're subcontracting. Ensure that the accuracy of the time and cost parameters for obtaining any permits or approvals from the required authorities, from the council, from the city. Preparing a soft cost budget, basically any other overhead related budgets which needs to be apportioned against various projects. And that sort of includes all non-brick and mortar costs, because there's other specific direct items you'll go in the budget, but there's a lot of indirect items that needs to go, or allocation if you're doing various projects, and they're common costs which you need to allocate. Like engineering, various consulting fees, architecture. Then analyzing the utilities, permitting, testing, and inspection costs. Ensure you have an FFE of furniture, fixture, equipment, or plant equipment design and budget factored in. Considering the allocation of a sufficient cost escalation and contingencies, having a risk management plan factored in your budget. And map and analyze the whole cash flow requirements, which is we've just discussed that it's a major killer in the whole process. And then establish controls to allow for real-time tracking of any cost fluctuations. Now, how do you avoid these cost overruns on a building or a construction project? So there's about 7 tips which I've highlighted there. Very important, to pay attention to these tips. First of all, thorough project planning conducted well in advance. So, sort of self-explanatory in terms of project planning, but detailed preparation will afford you more flexibility during the construction. Plan for all scenarios, gather as much information as you can, source and ensure a complete stakeholder buy-in before the project kicks off, and your stakeholders, depending on the business, if it's your building or you're doing heavy construction projects, or more sort of residential or trade, and it can vary, your scenario planning based on the type of work you're doing. Tip number 2, conducting due diligence on your potential contractors. Also very important, because working with contractors is an essential part of the whole construction process, but a decision that must be very carefully considered. A poor performing vendor or a contractor can contribute significantly to your cost overruns, and which could be beyond your control. It is essential that you understand the capacity of your contractors, their true competency, and closely analyze the quotes provided by them. If it appears to be too good to be true, then probably it is. So it's a thorough background check, could really be very helpful. Tip number 3, be ready for the possibility of the scope creep and change orders. As I defined the scope creep a little while ago. So change orders can present a big headache for the project managers and a major contributor to the scope creep. So, essentially your contract should have clauses to allow for the scope creeps and, the impact on your budget and how much price change that could lead to. The larger the project, the more stakeholders involved and the more likelihood of changes being requested, which probably is less of an issue in small residential constructions, but in large, development projects or constructions, it could be an issue. Ensure you have changed order provisions in the contract negotiated properly, and include the plan, steps, and the budget required for changes or scope creep. This can avoid the situation of your contractors increasing the cost to undertake the additional work. Tip number 4, define your clear roles and responsibilities for the project. So, without a clear organization structure, you run the risk of personnel disputes, unproductive interactions during the project. It's important to provide all individuals with clarity on their roles and responsibilities throughout the building process. Schedules which overrun manpower need to be established, which clearly highlight start and finish dates for the project, and the construction team to mobilize and demobilize from the project. The goal is, no one to be on the site longer than they need to be, because it's the manpower cost, which is the major sort of cost factor. Tip number 5, which is leveraging on your independent, oversight when estimating. So, each stakeholder could have a vested interest in seeing a project get approval and financing. So, you need to make sure that having an independent oversight on this whole process. Tip number 6, utilize experienced project and construction management. So inexperienced, project manager can lack both expertise and the confidence to effectively lead a project team. So on-the-job experience beyond higher education is key to ensure that your project managers can identify and respond to schedule delays, productivity issues, untimely cost overruns, and then cripple your project. Ideally, your chosen project manager will have an extensive experience in managing the estimating, procuring, scheduling, and contracting projects of a similar magnitude to what sort of you are undertaking. Tip number 7, early, regular, and clear communication with the stakeholders. Again, a key element preventing cost overruns is a clear line. Project managers, while stakeholders might want to line sort of update, teams need details. So consider what you're communicating, who, how, and often. It's important that the whole process is comfortable to raise any issues early, quicker, and if they're addressed appropriately, the project can forge ahead without much interruptions. Leading from that, I've sort of highlighted here some KPIs or some key financial sort of indicators or tools which you can adopt. These are more effectively ratios, and if you sort of inbuild that in your whole process, and it's like some of these major elements which will help you to keep your hand on the pulse of the business and on the projects if you keep these KPIs in mind. So some of the cash flow related KPIs, your cash demand periods, again, which depends on the cycle of your payments to be received and the bills to be paid, your accounts receivable or days locked in the accounts receivable, which we said is a major issue in the building and construction industry, your days allowed in accounts payable. So you need to have these standardized based on an average, and continuously monitor whether you're exceeding your standard days in receivables or payables, any overbilling and underbilling issues. So if you form these standard KPIs and monitor them, then you can really control the whole budgeting process. Some of the profitability margins, so keep an eye on your gross profit margin, and as probably you would understand, the major differences between the gross profit and the net profit. So the gross profit is sort of determined by reducing your direct costs from your sales, and the direct costs could have variable and fixed elements in it, and which help you determine your gross profit, because that is gross profit is the one which is going to cover your other overheads or your indirect costs, which could be variable and fixed, and to give you a net profit margin, which belongs to you as an owner, to give you a right sort of indicator of how much money you're making on any project or in your business on a regular. And your return on equity, it's very important. Sometimes we ignore how much sort of capital we have already invested in the business, and we might have a decent profit margin, or we're going with a low margin depending on the business, but we just forget about that the opportunity cost of the capital invested in the business, could be, there might be sort of better return on your business in a passive way than your business is even generating in the form of the net profit. Average revenue per hour worked, so that's effectively managing your staff's time, can increase the productivity and profitability, and this KPI can highlight really which type of projects are most profitable for your company. And without this information, you may focus on the jobs that seem they should be the most profitable, but they're actually not. Time and cost rate, this KPI can help you to forecast the length of the time and cost for your upcoming jobs and allow you to be more offer more accurate sort of quotes and improve your cash flow significantly. And it also can help you to keep the clients happy by delivering on time. So it's very important to monitor that turnaround times. Liquidity KPI, sort of measures your ability to meet short-term financial obligations, and essentially the quality is sort of in any construction company. So you track your liquidity ratio by dividing your current assets by current liabilities, and some of the major ones I've highlighted there, like a cash ratio, a current ratio, or a quick ratio. There's minute differences between them. So a current ratio is normally dividing all your current assets, like a bank, your debtors, by your current liabilities, which is your suppliers to be paid, and your GST, your other payroll and major expenses. So that's your current liabilities. And there's small differences in the quick ratio and cash ratio. In the cash ratio, you only consider your cash and bank balance. You ignore the other receivables and stuff. So you sort of determine how long the cash is going to last to be able to pay your current liabilities if you don't get paid from your customers in time. And the quick ratio sort of takes into account any stock of the material, if that's relevant in your business. I think that's about the last slide from me before I hand over to Julian. Now, Julian will explain a little bit more about the break-even and the importance of setting a break-even point in your business, or even be aware about that. Generally, residential builders can spend up to 15 to 25 hours, to get a quote built up to send it to the clients. And because it can be a frustrating, time-consuming process, they can rush and make mistakes in that quoting process. So if you're not aware of your break-even point in the projects, it can be a very costly exercise for you. So in the whole process of building low-margin businesses, and you can lose the focus that you might sort of tender for the projects below your break-even point. That means you're in the loss or in the red from the very beginning. But I'll let Julian explain that a bit more and demonstrate that how software like BuildExec can help you to have that awareness in the whole quoting process, in the estimation, putting the budget in place, and streamline your whole flow in your building and construction business. So with that, I'll hand over to Julian.
Awesome. Thanks, Dinesh. I'll just get you to stop sharing your screen there, so then I can share mine up.
Sure.
There we go. Cool. So you guys should be able to see that in a second now.
Yes.
Is that coming up? Yeah. Awesome. So I'll talk a little bit about what the situation was in the residential construction market, and how we help. So traditionally, there hasn't really been a whole lot of investment into software, and people have generally been doing things manually. So for resi builders, especially, you're talking manually drawing up your quotes, doing your takeoffs using a scale ruler and a pencil, pumping all that data into Excel, and then getting your quotes out, and then ordering materials. Is all done manually. So what we're seeing here is completely disjointed systems that don't talk to each other, don't provide any efficiency whatsoever. So that's where we come in, and we kind of tie all these things together. So I'll just show you who we are. So BuildExec is an estimation and job management software for builders and trades. The idea being is that it's completely end-to-end. So that first phone call that you get a lead through, doing the takeoffs, getting your bill of quantities together and getting the quote out to the client, as well as scheduling all of the work, organizing your subbies, suppliers, and then your employees as well, ordering all your materials, tracking where your costs are going, and making sure you're on budget, and then syncing back into your accounting software when you're sending all your invoices out as well. So we're a completely end-to-end solution. So How can Build Exact help? So we're going to be talking really about the issue with keeping on top of your costs and also improving your quoting process. So accurate estimates, as Dinesh mentioned, on average, a single story new build takes about 15 to 25 hours for a builder to get that quote to a client. That means multiple quotes that you're sending out, that you might not even be winning and spending a heap of time doing it. So people often come to us to help with the speed of the quotes, but also the accuracy as well. Because when you're doing it manually, you're more likely to make errors. If there's errors in your quote, no matter how good your quoting process is or how good you manage the job, you're always going to run over budget, or maybe under budget if you've done it incorrectly and you might not win the work because you've put your price too high. So that's one of the really key things, is that it's all well and good getting your accurate estimates, but you also have to get them done fast as well, because the competition is so big out there at the moment. Scheduling. So most people will tend to use something like Excel for their schedules, or maybe a notebook or a calendar or something where they'll try and manage everything. Not the best system, because it's entirely manual and you have to send notifications out to each person manually. Obviously, that means that when a delay happens on a job, and if any of you watch The Block or anything like that, you'll know that these sort of things happen all the time. Having to do that manually eats into your time, you forget to do things, and it means the job is going to suffer because of that. Cost tracking. One of the big things I talk to builders about is that most builders will be able to tell me roughly where they've gone over or under on a job. So it might be, on the concrete we went over. Okay, but why did it go over and how did it go over? And was it the labor? Was it the materials? Was it the time? What was it that actually caused those issues? So being able to track exactly where you've gone over or under, and you can see I've got a screenshot of Build Exact there that I'll take you through in a second. Controlling your budgets, so knowing exactly where we're running from our estimate versus our actuals at any point in time. As you can see there on the screen, the green is obviously good, the red is obviously bad, and we break it down to categories and lines. And track profit in real time. You might not be able to make it out, but in the top right-hand corner, there's a little gross profit margin box there. So at any point in time, we can see where the profit is once we start raising our invoices. So I'm going to take you through Build Exact. So hopefully you guys can still see that screen. I'm just going to show you a couple of key areas. So we're going to focus on takeoffs first. Now this is about accuracy and speed. So this is a bricks supply and install line. So we've got the cost of the bricks, the labor, the sand, the cement, and the ties. And we're going to work out the quantities and the cost super quick. So the way we do that, we go into our takeoff tool. We jump into our elevation. We just zoom in, and we're just going to go point to point on the outside. Now, remember, if you're sitting here doing this manually, how long this will take you versus what we're doing now. Point to point and across, and you'll see in the top right-hand corner there, we've got 33.21 square meters. We'll take the windows out. I just zoom in a little bit more for this. And you'll notice in the top right-hand corner, it's reducing that amount. Now, we're getting this done super quick, but super accurate is the more important thing here. Now, when it comes to sending your quotes out to a client, if there's any to make any changes, you have to go back in and do all of this stuff manually again. Build Exact's super easy to do. So 28.62 square meters, we hit accept and save. And then if we go back into the line item, we can see the exact quantities of each one of these line items that we need here. And it feeds into an overall square meter rate of $162 for brickwork. So that's the importance of the accuracy side. When you're ready to send the quote out and you've got all your amounts in there, all your costs in there, I'll just hit save. You would normally send the quote letter using Build Exact. I'm just going to print it so you can see how it works. So if I wanted, I could have all my logos and everything in there. You've got pictures, so it's nice and professional. And then if there's any costs in there at the bottom, you'd have those in with the total. So with this, you are more likely to win more work because you're getting quotes out quicker, more accurate, and more professional to a client. Now let's talk about once you've started the job, how you can manage your costs and actually manage the job more efficiently. So this is one that I've done earlier. So Build Exact allows builders to go in and create a schedule. In that schedule, you can set notifications and reminders to go to a particular subby or supplier. So you can see here Bob's Tree Services or Austral Bricks. I can very easily jump into this and actually send a different reminder at a different point in time if I want to. And I'll go out via email and SMS. The benefit of this is if anything gets pushed out for whatever reason, it's going to push everything else that's linked to it. So it keeps your trades up to date as the job is progressing, which then minimizes the impact of any delays on errors that may happen or may occur. I won't go into this completely, but you saw a screenshot of it earlier on. As we order our materials, it will track how our spend came about, our actual spend versus what we estimated the cost to be. So as you can see here for the bricks, I went 14% over the brickwork because I had incorrect pricing. And I can see that I've spent a total of 67% of my brickwork budget. So it's really good that you can track these costs at any point in time. And as you start going through this, you'll start to see where you're going over and under. The idea, you base that off of your previous jobs. So you're doing a quote the next time, you look at maybe the last 3 jobs and you see, okay, where am I going over or under? If there's a trend happening, then you can act on it rather than just putting a quote out that's going to be wrong from the get-go. And then when you're done, you can also send the invoices out here. Now, BuildExact syncs the accounting, syncs over the accounting software to Xero, MY being QuickBooks for all your purchase orders and your invoices when you send them out. So as we can see, it's a completely end-to-end system. And what it does, it keeps track of the costs as you're going along. And you can also manage variations, and you can pull reports at any point in time to see what your committed costs are. That you can use to obviously figure out if there's anything you need to have enough cash to support, as Dinesh mentioned on the cash flow side. What this also does, if you look back and you see where you're only making a 10% profit margin on every single one of these, you know where you need to start your pricing. There's no point in keep on pricing and trying to manage the job more efficiently if you're always running over. You need to fine tune your quoting process, make sure that you're winning the right work and you're not just dropping your pants on the quote just to win the client, because any mistake on a job is going to significantly eat into your profit margin, especially nowadays where clients are trying to push for the price to come down. Just know what you're worth and don't accept a job if you know it's going to eat into your profit margin too much. You're better off spending the time to win the correct work you want to win rather than taking jobs that are going to cut into your profit margin. You're not going to make any money from them. So guys, that's BuildExact as a quick snapshot. I said it's an end-to-end system. It's all online, so there's no upfront fees, no training costs or anything like that. You can sign up for a 2-week trial. You will get a discount because you've come through from this webinar. So just let Dinesh or Mona know, and we can get the discount applied for you. buildup.com.au, 2-week trial, and you'll be up and running fairly quickly. And there's free training involved. So yeah, feel free to ask any questions from me directly as well if you need to. But that's it from me. I think I'll just bring Dinesh back in now. I think my screen is now stopped, I think, yeah.
Yeah, thanks, Julian, for the insights. I think as we can see, the clear advantages of using the proper technology and the software, and how much it can cut down the time and resources involved in, I suppose the entire quote can be generated within, 1.5 hours or under 2 hours, I presume.
Yeah, we take it from about 15 to 25 hours down to about, most people will get down to sort of the 2-3 hour mark. And then people that really work at it will get down to about 1.5 hours.
Yeah, which is, you can, quote 10 projects in that time. So very efficient system, and also then maintaining the accuracy on an ongoing basis. So
yeah,
and the return on the investment, in the cost of the software compared to your time cost on, the whole process is significantly, different.
Yeah, exactly. Like the problem that a lot of builders have is they'll take 20 hours to quote for a job. They might take a week and a half, 2 weeks to get back to a client because they're busy. Another builder might have quoted that in 2 days. So if I'm going to spend 250 grand on a new house, or 300 grand or whatever that is, and someone else has got back to me in 2 days and someone else has taken a week and a half, 2 weeks, already I'm thinking, well, this is how they're behaving when they want my money. what are they going to be like when they've got my money? So that's kind of how I always think is most businesses around the world, you get through to salespeople and you get a sales quote very, very quickly. But builders, it takes a little bit longer. So trying to speed that up for people.
Yeah. All right. So we've got about 5 minutes for any questions. And if any of our attendees have any questions, please feel free to pop it in the chat or in the Q&A. So we'll just see if we have any question.
Yeah, there is one there regarding the accounting sync. So for BuildExact, so when the purchase orders are received, is what we deem it in the software, effectively when you get the bill from the supplier or subby, we sync that data over, and we also sync the invoices over to Xero, MYOB, and QuickBooks. It's a manual sync, so it's when you want to sync, you press a sync button, and it'll tell you how many records are going across. So it's not just going constantly across.
Okay, so every time you do any input which you want to transfer across, or do you issue invoices from BuildExact as well, or you'll only do the quoting and then the progress invoices you'll issue from Xero?
No, the whole thing from us.
Okay, yeah, okay.
Yeah.
So the build, okay, yeah, that's also a very good, convenient process so that you're not double handling anything, which is a good sort of advantage. We'll see if we have any other questions.
It's just about cost savings from building. So how much cost savings have companies had by adopting this technology? It's hard to know exactly, but on average, it's about 80% of your admin time is reduced by using an estimation and job management software. Because literally you're sitting there with a scale ruler and a pencil and drawing every single line around to figure out your costs. So it's very difficult because it really depends on the individual business. But for most people, spending 80% less time doing that stuff, more likely to win more work because they're getting quotes out quicker. So it'd be a heap of time and heap of money.
Yeah, which is significant. I think that's a significant saving. All right, I think we are running out of time. So if anyone has any other questions, they feel free to send it to support@fortunaadvisors.com.au, or we can pass it on to Julian, or you can reach out to Julian directly if you have any questions. More than happy to answer. If anyone needs a personalized demo, that can be arranged with Julian as well. So thank you, everyone. Thank you, everyone, for attending this morning. And thanks, Julian, for your time and providing the expert tips. So we look forward to our upcoming webinars. So please stay tuned to our news channel and our notifications for the upcoming webinars. And those who registered for our other webinar this afternoon on the federal budget, we'll look forward to see you there. Thank you. Have a good day. Thanks. Bye.
Thanks, guys.